Good morning, everyone. I am Rishiraj Jhala, and today I will be presenting the Director Reports and Integrated Insights of Syngene International Limited for the financial year 2022 to 25. This report highlights the company's overall financial performance, strategic developments, and digital initiatives and future outlook. Syngene is a leading Indian biopharmaceutical service company. During the review period, it transformed into fully integrated CRDMO, which stands for Contract Research, Development and Manufacturing Organization. This means Syngene can now offer complete end-to-end solution to global pharma and biotech companies, covering research, development, and performance under one model. From 2022 to 2025, Syngene achieved a revenue CAGR of 11.8%, showing consistent business growth. Its operating margin remained strong at around 29%, reflecting excellent cost management and operational efficiency. Although the net profit margin and ROE slightly declined due to heavy capital expenditure and higher tax rates. These were planned investment to build a future capacity. One of the most important strategic milestone was the acquisition of biologic manufacturing facility in the United States, expanding Syngene's global footprint. It also expanded its API and R&D infrastructure in India and completed its transition into global scale CRDMO model, which strengthens long-term competitiveness. To enhance productivity and scientific accuracy, Syngene launched Project Vega, a digital transformation program. It implemented SAP S for HANA and created a data management office for data governance. AI tools like SynAI and SAR TTED were introduced to speed up during discovery and improve decision making in research and development. Syngene has also made a strong progress in sustainability and ESG performance. The company now uses 82% renewable energy, reduced greenhouse gas emission by 21%, and recycled 42% of its water. It aligns its global with the United Nations Sustainable Development Goals, particularly SDG 3, good health, SDG 7, clean energy, and SDG 9, innovation. Looking forward, Syngene is now entering its monetization phase, meaning it will start benefiting from its major investment. The focus will be on increasing capacity utilization, expanding AI-driven efficiency, and improving profit margins. These steps will enhance long-term shareholder value and global competitiveness. Conclusion now. In conclusion, the year 2022 to 2025 were transformative for Syngene. The company strengthened its financial base, advanced in digital and AI integration, and made a significant sustainability achievement. This strategic moves position Syngene as a global leader in biopharma innovation and manufacturing excellence. Thank you, guys. Thank you so much.
Good morning everyone. Today I will be giving a brief analysis of Syngene International Limited market and shareholder performance of financial year 2023 to 2025. First, let's look at the share price trends. During this period, Syngene stock was quite volatile but fundamentally strong. It touched a high of rupees 960 in December 2024 and later dropped to a low of rupees 599 in May 2025, showing wide price swings. The 1 year return was around minus 27%, which means the stock lost about a quarter of its value. Its volatility of over 33% shows strong market uncertainty, while the beta of 1% indicates the overtime. It moves in the line with the market. However, in the short term, a lower beta shows the decline was mostly company specific, not market wide. Next, the shareholder performance. Between June 2024 and June 2025, we saw some big ownership changes. Promoters reduced their stake slightly from 54.7% to 54.2%, showing de-risking. Foreign investors also sold heavily. Their holdings fell from 20.6% to 16.5%, likely due to global biotech concerns. But interestingly, domestic institutional investors such as mutual funds and insurance firms increased their stake sharply from 16.8% to 24%. This clearly shows strong domestic confidence in the company's long-term fundamentals. Moving to the valuation, even after the correction, Syngene trends at a premium to PERS. Its PE ratio is around 50 times and PB ratio is around 5.4 times compared to the industrial value of 3.6. This means the market still views Syngene as a high growth, innovation driven company, not a typical pharma player. Finally, connecting performance with market confidence. Financially, Syngene did very well. Net profit grew by 116% in financial year 2024 and another 9% in financial year 2025, with stable ROE around 19 to 20%. But despite these great results, the price dropped mainly due to valuation reset. The earlier high valuation with a PE above 90 wasn't sustainable, so the correction was healthy, not a sign of weakness. At the same time, concerns about slower growth ahead affected sentiment. While foreign investors excited, domestic institutions stepped in, showing belief in the company's future potential. In conclusion, Syngene remains financially strong, innovative, and well positioned for long term growth. The recent fall is simply a period of correction, a reminder that even great companies need realistic valuation. Thank you.
So now we would be talking about DV's financial performance by going through its ratios and KPI, analyzing them and looking at its ESG score. And we would be doing it by comparing it with its competitor Divi's Laboratories. So firstly talking about, okay, so before we move ahead, I would like to put forward a question that a company can being less profitable than its competitor and still be considered more efficient. Well, moving ahead, maybe when we would go through its ratios and things, you would be able to definitely answer this question. So looking at its liquidity ratios, that the current ratio and quick ratio of Syngene is is more consistent and is almost around above 2.0, which demonstrate that it's standing at a strong liquidity position, though even though it's less cash rich than the DV's international DV's laboratory. So now we would be talking about the solvency ratios, which can be stated or find out by the debt to equity ratio. So debt to equity ratio for Syngene International is 0.3, which is not that high, is a good number. But if we compare it with the DV's laboratories, which is 0.03, yes, quite lower than Syngene International, we can say that DV is going almost debt free, and which is even leading it to much higher interest coverage ratio, and not maybe, and also the more profit margin because of it. And like but when we profit margin, because the net profit margin for DV is around 27.5%, and if we talk about Syngene, it's 14.8%. So there's a huge gap. But if we talk in terms of efficiency, which was the question, that even if a company being less profitable can be more efficient. So for efficiency, we would be analyzing the turnover ratio of Syngene and this DV. The turnover ratio for Syngene asset is 0.68, which is higher than DV's index, which is 0.61, and which tells that it's higher, so it's better. And now creating some values beyond the ratios, we would be talking about the ESG score. Yes, environment, social, and governance. The ESG score is quite higher, good, and uh, higher good, and which states that it's consistently improving, and by being sustainable and responsible towards its business practices. And yes, and it's altogether also Syngene International is doing good with its profit, like during this financial year of 2025. It was have it had a profit of 235 crores. So it is doing pretty much well, but like a bit lower than the profit of Divis.
Hello sir, I'm Meghna A. So today in this video presentation, we're going to talk about how the Syngene International Limited has sustained its cash flow and its contribution to the green finance progress. So which is a front runner in the biochemical industry and in the pharma industry, and it has stand out its capital allocation and benchmarking its operational efficiency in the fiscal years from 2021 to 2025. So firstly, we're going to talk about the comparative cash flow analysis. So the first focus at Syngene's cash flow is the operating cash flow has nearly doubled over 4 years, and indicating the enhanced business fundamentals and robust core operations. And investing cash flow has been negative, pointing to the consistent reinvestment for the capacity and technological upgrades, which is going to drive and which is going to gain revenue in the long term for the business. So the investing cash flow has been more into investing to get the future revenue, and the financing cash flows has been fluctuated due to debt repayments and shareholder returns due to its negatives and losses in the company. The shareholders have lost the interest, and the shareholders have requested returns, and but showed the prudent reduction last year, highlighting the loss in the company. And the net cash position turned significantly positive in 2024 and 2025, signaling the strengthened liquidity and financial health. Despite of the financing cash flow fluctuations, the company still managed to have a cash flow position significantly positive, and this shows the company has maintained that significant progress and strengthened its liquidity and financial health. And the company has contributed to the green finance and ESG achievements. And in the ESG achievements, the renewable energy accounted for 86% of the total usage. Water recycling jumped from 15% to 20%, where the energy have triple. Where the energy savings have tripled, and the company met 83% of its carbon reduction goals in 2024 and 2025, excelling in ESG disclosure and compliance. So this engine was ranked number 1 in India's farms and biotech sector for sustainability by Time magazine, and maintained a strong SES and ESG rating near 76%. And the green finance initiatives have measurably reduced carbon cost and reinforced financial resilience. Uh, and the next we're going to talk about the cash flow, health and sustainability readiness. Summing up, the Syngene's growth, operational cash flow, prudent investment and financing strategies have vigorous ESG integrations, together positioning the company as a sustainability leader with a robust cash flow health. Its comprehensive roadmap ensures a long-term business viability, stakeholders' trust and competitive advantage in an evolving global landscape. And thank you.
So, hello everyone, my name is Ritik Kumar. I am going to discuss about market shareholder performance of Syngene International Limited. Their first subcontent is historical share price trends. Syngene share price performance over the 2022 to 2025 period highlights a trajectory of a strong growth, followed by consolidation. In financial year 2022, Syngene's stock traded steadily in the 550 rupees to 650 rupees range, reflecting cautious optimizing following the post-pandemic recovery. By mid-2024, the share price surged to approximately 900 rupees, representing a 40% appreciation from 2022 levels. However, the bullish momentum moderated by early 2025, with prices correcting to the 600 rupees range to 700 rupees as investors booked profits and growth forecasts normalized. The beta value of approximately 0.9 relative to the Nifty index suggests that Syngene's stock moved largely in tandem with the broader market but displayed slightly lower volatility than the average equity. Second one is shareholding pattern analysis. As of June of 2025, the promoter group held 52.7% of Syngene's equity and no promoter shares were placed. Foreign institutional investors held about 60.5% total equity of by mid 2025, down from nearly 19.5% year in the year. Public and retail investors accounted for the remaining 6 to 7% of the shareholding. Third one is valuation metrics and peer comparison. Syngene's market valuation has consistently reflected high investors' expectations. The company trades at a premium relative to most domestic pharmaceutical and biopharmaceutical peers. Such elevated multiples suggest that investors continue to ascribe a growth premium to Syngene. Comparatively, peers such as DV Level Laboratories, Laurus Labs, and Glenmark Life Sciences typically trade at lower multiples with price earning ratios in the 25 to 35 times range and PV ratio around 3 to 4 times. The premium valuation also stems from the company's focus on long-term contract research agreements, which provide visibility of earnings as well as its strategic collaborations with the global biotech and pharmaceutical giants. Fourth one is financial performance and market confidence. The company's operational and financial performance over 2022 to 2025 has been a critical driver of market sentiment. Between financial year 22 to 24, Syngene demonstrated steady growth across all key financial indicators. Net profit rose from 396 crore in financial year 2022 to 510 crore in financial year 2024. Return on equity averaged around 11 to 12%, supported by stable margins and efficient capital utilization. However, in financial year 2025, net profit marginally declined to 507 crore and revenue growth moderated. The company issued cautious guidance for the upcoming fiscal year, citing delay in project ramp ups and foreign currency fluctuations. Fifth one is interpretation and strategic insights. The interplay between Syngene's financial performance and market confidence reveals key insights into investor behavior in and valuation dynamics. Domestic confidence versus foreign caution. The rising